There's a lot of them. I think that do the right thing is the whether I have my kids will tell you the Gortner family values are essentially the corporate family values. So we have a little plaque on top of our stove with listing the various different corporate family values. Integrity and do the right thing is at the top. Perseverance is the second. Keep moving forward. Business has, especially the real estate investment business, is so dynamic. I mean, I like it. A lot of people are frustrated by it. It's just we get thrown curveballs on all fronts all the time, and if you're not thinking about where interest rates are going, where the economy is going, how does this new president in Brazil affect our business or not? What are the myriad of factors that can affect the fundamentals of a particular strategy you're doing? The dynamic nature of building and growing a business, it's grown more dynamic over the last 10 to 20 years compared to where it was back in the 80s. Things seem to move a little more slowly back then, not now. There's too much information available. There's too much capital out there looking to take advantage of friction in the markets, looking to take advantage of arbitrage opportunities, looking to step in, seeing that our success in certain areas and moving in and trying to capitalize on that. So keep moving forward amidst all of those circumstances that could go wrong is important. I mean, we just closed last week on a 3-property portfolio that we had tied up in escrow for 7 months, and we had 2 different lenders blow up on us as a result of what's going on in the debt markets right now, as a result mainly of the war, but also rising interest rates and economic uncertainty. And we had to recapitalize it with 2 different institutional equity partners. And each one of those events where a lender blows up or an institutional partner says, I got to step out, we had a sense we're pretty good at seeing red flags and warning lights. And so we had always try to have a little backup plan. And fortunately, we had those, and we were able to put those in place. And we ultimately got this deal closed. We had a very accommodating seller who I happen to know, which is rare in this particular business, because we tend to buy from relatively unsophisticated mom and pop owners. But this is a situation where I happen to know who the seller was. So there was a level of trust there, and that mattered. Focus is important. I think it's a corporate value that we try not to be all things to all investors. We really do try to focus on strategies where the market opportunity is unique, where there are barriers to entry, where our particular skills lead to better execution, a particular competitive advantage. So we've found that workforce housing that has strong demographic underpinnings in supply constrained markets where there's barriers to entry for institutional capital, those generally are good ingredients for superior returns. Part of the reason for the barriers to entry in the markets where we've been most successful is because the deal size tends to be smaller than institutions would prefer. And so it's very management intensive. So if you want to build $1 billion portfolio, if you're doing it at Paladin, that's hundreds of assets. If you're doing it at Blackstone, it might be 10 assets. So we like that. I don't want to compete with Blackstone. I want to be a competitive complement, actually, in a portfolio where many of our investors invest in Blackstone, but they invest with us because Blackstone gets them to a place that nobody else can as do we. And when you combine them together, it actually provides nice diversification and a complement for a portfolio.